Administrative items today. First, we were supposed to have the guest speaker from Morgan Stanley show up today. Unfortunately, because of an earnings call, she couldn't make it. So it was rescheduled to a week from Monday. All right, so next week is the midterm exam. We get back on that Monday. She is now going to be coming to the 2 p.m. section. All right, so originally she was going to go to the 12:30 section today. Because of the train schedule and her schedule, she's going to come to the 2 p.m. section a week from Monday, right? So that Monday, when we get back from the midterm, right, basically what's going to happen is those next 3 classes, so really the next 2 weeks, we're going to build an Excel model for valuation, okay? So you will need Excel, and what's going to happen, and you'll need a laptop or one of the computers in the room. But there's not enough computers in the room, so you'll need a laptop. And I, on my laptop, will be building the model. You individually will be following along with me and creating your own version of the model on your Excel file. And there will be several homework assignments where you're giving me pieces of the model and then the final model that we built. That will be the group project model that you're using this semester, but you'll individually build it. Okay? So it'll take us 2 weeks to build the model. It'll take us 10 minutes to reuse the model in company number 2. So we will build a reusable model tied to Bloomberg, but that will be a week from Monday, right? Now, I say that because during the 2 p.m. section, when our Morgan Stanley guest is going to be here, I've asked her, since she covers like CAT and Deere and Komatsu and Joy and other construction heavy equipment companies, to bring her actual Excel file, so her version of the model for CAT. So she'll share some of that with us, how she creates it. So we'll see a real Wall Street model. But for the 2 p.m. section, you will actually have the access to the Morgan Stanley person. It's only going to be for one section, right? And I don't know if we're going to be able to record it or not, because I thought Lockheed Martin we could record, and the speaker said he'd prefer not to be recorded. So I don't know if she will or will not let us record it. Hopefully she will. But the point is, the 2 p.m. section will see her live. The other 3 sections during the day will start building the Excel model. So that will be recorded on video, and so you'd still be responsible in the 2 p.m. section for watching the video on that Monday and doing the work, even though we would have a guest speaker during this section. Okay? So that's just one heads up administratively. So on Monday and Wednesday next week are going to be parts A and B of the midterm exam. Okay? So as I mentioned before, part A is going to be an economic statement conversion. It's going to be a lot like homework 5. Right? So I'm going to give you a data file. You'll have basically an hour and 20 minutes to convert it. Just like homework 5, you'll need to type your answers into Canvas, Elms, and then you'll have to upload your file, and then that'll be part A of the midterm. No analytics, just the conversion. Very similar to homework 5. That's Monday, part A. Yes?
And the labels, like what you do?
The labels will all be there.
Will be there?
Will be there. Okay. Part B of the midterm on Wednesday will be 9 to 11 essay questions and maybe a couple of short answers. So somebody sent me an email and said, well, I want to study for the midterm. What do I need to do? And I didn't know how to answer that, because the short answer is the midterm is open book, open notes. You have to use a computer. Okay. So it's not like you have to create a cheat sheet or anything else like that. Right. But it's going to really be on the theory. So anything in the 9 chapters of assigned reading, anything in the PowerPoint, anything in the homework assignments, anything we've covered in class is fair game for the midterm. Okay. Now I will say, I'm not going to ask you like what's the 3rd word on page 14. I don't like those types of questions. But that being said, the bias is likely to be, if we talked about it in class or it showed up in a homework, it's more likely to be on the midterm than not. Okay. As a matter of fact, today's class, or 2 of the essay questions on today's class, will directly come from today's class. So I will give you the heads up on that one. Okay? But basically, that's what's going to be key to the midterm exam. So A on Monday is just convert the statements. B is, do you understand what we've been talking about this semester? Answer a couple multiple choice, write some essay questions. Both will give you an hour and 20 minutes during each class. Okay? Now, I have not gotten any, I think they're called, DSI forms or whatever it is for people requiring extra time. So I'm assuming that applies in here, that nobody is getting any extra time and has to complete it during class time. Okay? Now, yes?
So we bring our laptops to class and then we do it on our laptops.
So here's the deal. The exam, midterm exam, is going to be a timed assignment on Canvas. Okay? And I'm actually going to set the timer, you've never taken one before, for 90 minutes. Right? So technically I'm saying you have 80 minutes to do the exam, but I'm giving sort of a 10-minute buffer, so it has to be submitted within 90 minutes. So you will go to the link on Elms in the assignments, you'll click on the link, it will start the exam, and unlike Homework 5, when you click on the link, you'll then be given the Excel file. So you won't get the Excel file until you click on the link. It will start a 90-minute timer on the server. Right? At the end of the 90 minutes, you will have to type in your answers and you'll have to upload a copy of your converted Excel file. If you do not, at the end of 90 minutes, the server will auto-submit. And if you haven't saved anything, you're going to get a 0. And because it will auto-score it and give you the answers, we have no way of giving you credit for anything that you did not submit. So it is extremely important that you submit by hitting submit and you do not let it auto-submit. Because in the auto-submission, if you start typing in numbers but you don't hit submit, there's nothing that was saved on the server. So when it auto-submits, it's just going to submit a bunch of blank data. And then you will get 0 credit. So you must submit during that 90-minute period of time. That will apply to Monday and it will apply to Wednesday. If you can't finish the conversion in that time period, it is important that you type in whatever numbers you can finish and submit before the timer runs out. Okay, because you want to get credit for something, even if you can't finish everything. Because getting 5 points is better than getting 0 points. Okay, same thing with the essay questions. Right, so make sure that if you essay questions, you run out of time, can't write the final essay, submit the ones that you wrote. Don't let it auto-submit and then nothing gets saved. If you have a technical problem, you need to let us know immediately when you have the technical problem. Okay? So if you wait 3 hours from your technical problem, then we're just going to be very suspicious of that time gap, and you're probably not going to get any credit. So if it's 5 minutes before the expiration of the timer and your computer locks up, freezes, and dies, then within 3 minutes you should be on the phone with myself or a TA. You should be emailing and lighting it up. I'm having a problem. Here is the work in process that I have done. Please help me, and we'll try and work with you as best as we can. But if it locks up, freezes 5 minutes before, you go about your merry way, and 4 or 5 hours later you happen to let us know that you had a problem, and you try and submit, don't care what the timestamps are, we're not going to be sympathetic, and it'll be really, really bad for your semester grade. So again, if you have a problem, you need to let us know immediately. So you're probably thinking, what is he referring to? So here's the deal. This lab has unreliable computers. These computers are 7 years old, right? They have less memory than your smartphone and are less powerful chips than your smartphone and are prone to crashing and dying. So I would take the exam, if I were you, on a reliable computer. So what I'm going to do is I will let you take the exam wherever you want. So if you want to take it in this lab, you can take it in this lab. If you want to take it on your laptop at home, you can take it on your laptop at home. If you want to take it in a different lab, you can take it in a different lab. So it is your choice about where you want to take the exam. You don't have to take it A or B in the physical classroom. So I would strongly recommend, even if you take it here, like I see a lot of people with laptops, you're probably better off on your own personal laptop than even these desktops, because they can be unreliable, and I'd really hate to see your grade go up in smoke because one of these machines locks up. Yeah.
So if we're in the 2 o'clock section, we need to take the exam during the 2 o'clock?
So that's a great question. So this is the other very important thing. So you must take the exam during the time period that you're registered for on Elms. Okay? So if you're registered for the 2 p.m. section, what's going to happen is the 90-minute window is going to be between 2 and 3:30. So you won't be able to access the exam if you're registered for this section at 12:30, and you won't be able to access it at 3:35. So it will lock you out outside of that time window. So you must take it during that time window. Right? Now, again, if you've never taken an exam, what's key is you'll click on it to start it. So you don't have to start at exactly 2 p.m. It's 2:11 right now. You could start it at 2:11. Okay? You'll still have 90 minutes, but you must start during the class time and you must finish in one setting, right? And because the timer's going off on the server, not your laptop, even if you close out of the browser or it crashes, that timer's still running on the server and it will auto-submit 90 minutes after you click on that link, right? So you'll have an hour and a half window to start the exam and then you must finish it 90 minutes within starting it. And that window for both dates, unless you come to me in advance and we work out something different, you have to take it for that class you're registered for that start time. Does that make any sense? Right. Yes.
So just to confirm what you said, if you were to start at 2:20, from 2:20 you have 90 minutes.
Yes. But that's the point. You have to start it before it hits 2:30 because at 2:30 the link will go away and it just won't work, right? And at that point we're not going to give you credit. Now for Part A, just like Homework 5, you have to type in your numbers and you have to individually upload your Excel file, right? And I'll just be very candid. There's two reasons why I want the Excel file and why I want you to type in your numbers. One, it makes the grading for the TAs a lot easier because Canvas and Elms will auto score it. So you'll get immediate feedback on your grade, which means the grades are going to be out there, right? So I shouldn't expect this to happen, but we got at least 4 students this happened to where for whatever reason they typed the wrong number in and they had the Excel file submitted, so we were able to go back and confirm they had the right answer and give them credit, right? We hope that doesn't happen, but at least if the Excel file's there, we can do it. The other reason why we're asking you to submit the Excel file is to prevent cheating, right? This is an individual exam and there's no collaboration. If you turn in somebody else's Excel file, both of you will go in front of the Honor Council, both of you will get an XF, and with an XF, you will not graduate if you're a senior, okay? So it is not worth it to share your Excel file with somebody else, right? And I'm just going to be real. What I've noticed over time when I've done this, which is why I'm leery to do this, but I'm trying to be practical, is that the grades in the 3:30 section are dramatically better than the grades in the 11 a.m. section. And section by section, the grades get better. And I don't think that everyone in this room is necessarily smarter than the people in the 11 o'clock session, but I know what happens. And I'm telling you that myself and the TAs are looking for that because that is unfair. It's unfair academically, and it's unfair to people in the previous sections that had to take it first. So I want to be as crystal clear as possible. Academic integrity is really critical here. So it's an open book, open note exam. There's no reason to talk to anybody else about it while you're taking the exam. If you have a question, talk to myself or the TAs. Track us down, right? We'll help you, right? But don't share files with each other, and don't upload somebody else's file by mistake. There is no reason that should ever happen. So make sure it doesn't. I'll just leave it at that. Right? So with all that said, questions about the midterm, A or B? Okay. So as I said, the good news for you is you don't have to physically be here to do it. You can do it the comfort of wherever you can get an internet connection. If you happen to go to a different time zone, just make sure you take it in the correct time zone that's East Coast time. All right. So if you go to California, right, and you're in the 2 o'clock section, well, it's 3-hour time difference. You start at 11 in California. Still 2 o'clock in the East Coast time. So make sure you start it at the correct time for the section that you're registered for. Okay? So it's not going to be as hard as it sounds, but I just want to be really clear about the logistics as we go through this session. Okay? Yes?
For Part A, is it around the same number of accounts as on Homework 5?
It'll be very similar to Homework 5. I will probably take off 1 or 2 items and add 1 or 2 items on the income statement of the balance sheet. Okay, so I mean, the short answer is somebody actually said in the last class, they said, well, is it okay if I actually take the solution and create like a model with all the formulas pre-filled in, so I can just type in the numbers and then it'll actually answer it? I have no problem with that. But the point is, I'm going to change the model so that even if you do that, I want to make sure that you understand how you'd have to adapt the model if you get a couple of new items. So it'll be very similar to what you saw in Homework 5, but as I said, I may add or subtract a couple of items in the income statement and the balance sheet. So 80% of it will be the same, but I'll also tell you the tax rate will be different and the cost of capital will be different. So don't just use what you did in the previous homework on the midterm, because I'd hate to see your grade go up or go down because you got sloppy. Like, look at the data you presented and convert it. But it's not going to be dramatically different. Yeah.
Are you gonna, when you provide like the data file, it's not gonna have categories, right? We're gonna have to do that.
Nope, it'll have 1, 2, 3, 4.
Oh, well.
Yep, it'll be very similar to
Just
homework
like
1, or sorry, homework 5. So to help you with all of that, if you go to Canvas, I keep calling it Canvas. I know you guys call it Elms. If you go to Elms now, under the File section, Homework 5, you will see that I uploaded a solution, which we're going to talk about in just a minute. Okay, so there's an Excel solution in that folder. In the root folder of files, you'll notice that there's a practice conversion and a practice solution as PDF. Not graded, right? But again, if you just want to play around with practice, it's just a very simple practice. And there's a folder called the practice midterm. This is a midterm I gave out like a couple semesters ago, 3 semesters ago, something like that. So that was an actual midterm. So again, if you really want to, try again before Monday on what the midterm might look like, try the practice midterm. Again, it won't be for a grade. This one's not going to be timed. You have the solution as well as the data file, the separate files, but that'll be a lot like what you'll get on Monday, something like that. Because that, as I said, that was a previous midterm. Okay, so that's up there on Elms under the file section right now. The only difference is on Monday, like I said, you got to get it done in 90 minutes. So that'll be the real key. It's the time pressure of getting it done. All right. Final questions about anything? All right, so let's talk about homework 5. All right, so I posted, as I said, the homework 5 solution. This is the converted statements. I'm guessing based on the previous 2 classes today that you didn't have too much trouble with the TFI or the TII. And for those of you who struggled, you probably struggled on the CFI. Is that fair?
Yeah.
All right. But for those of you, any specific questions about TII or TFI? Any questions about CFI before we kind of dig into this? No questions? Did most of you get it right, complete it? Anybody have to not get it right and abandon? There's no video, so nobody can see if you raise your hands. All right. Well, I will say that somebody came by my office hours this morning around 10:30, and she had really struggled with the CFI. And the point is, she asked a question which I think is probably on some of your minds, and I think it's legitimate. And this is why I said CFI is hard, and specifically why I told you this was going to be the hardest week of the semester. And the challenge that she had and her frustration was the bias that came into the statement. It's just natural, right? Because this is not the statement that you learn. So before taking this class, all of you took accounting. And in accounting, you learn GAAP cash flow. So I'm telling you, your bias is GAAP cash flow. And that bias is one of the most difficult parts of doing this economic conversion, because GAAP cash flow looks at a different way. So where she was struggling was with the signs and figuring out which signs which and whether or not to add or subtract things. And when she was describing to me where she was struggling, as I said, I think some of you probably did the same thing, is she was struggling because she was using the metaphor of the GAAP cash flow statement. So what she was describing, she said, look, the way I was originally thinking about it is that anything that adds to cash adds to CFI. So for example, if I add debt, then I add cash and I have more cash. Well, that's GAAP cash flow, because the whole point of GAAP cash flow is you do sources and uses, and you look at all the sources, you add them up, and you look at all the uses, and the difference is you're changing cash, right? And so that's not this statement. See, that's where you struggle, because if you try and do that with this statement, you'll never get the right answer, right? Because it's not about saying, I issue debt and I have more cash. That's not the statement. This statement is an economic statement. So this is the metaphor I use with her. So I'll share it with you to see if it helps anybody in this class or listening to the video. Which I said, think of it this way. I said, assume you have a job. You get a paycheck, okay? So free cash flow is like your paycheck. All right, here's how much money I made. And then the rest of the statement's like my bills, right? So I'm going to have 2 piles, and in one pile I'm going to have my paycheck, and the other pile I'm going to have my bills, and those 2 piles are going to equal each other, right? So I make $1,000 worth of income, and therefore I'm able to pay $1,000 worth of bills. That's the 2 sides of this statement, okay? So debt is a bill, okay? So I have income so I can pay my credit card. So $1,000 of income equals $1,000 of credit card payment. And it's not an absolute value. So in this CFI statement, I can't have 1,000 on one side and negative 1,000 on the other side, because that is not a balancing statement, and it doesn't work with absolute values. I have to have a positive 1,000 on both sides. So that's the point. The format of the statement is, I have income, therefore I can pay a bill, $1,000 of income, $1,000 of debt being repaid. Debt repayment on the CFI is a positive number. The opposite is true. I don't work. Well, I have to pay $1,000 worth of debt. Where do I find that money? I have to fund that loss some way. So therefore, I might have to borrow more money, or I might have to reduce my savings account. So I have negative on the excess cash side. Positive on the excess cash side. Take money to afford to pay it out if I have to make that payment if I don't have any income. Or if I have losses, negative income, then I have to have negative income equals the negative cash that I had to bring into the business to support that negative income. So negative inflow on the financing side, negative profit, negative free cash flow on the other side of the CFI. So again, this is something that initially you'll struggle with. The good news, in 60 days, you guys will be whiz kids, because you're going to keep doing this repetitively for the next 6 weeks. Okay? So every week you're going to be seeing a version of this statement just with real companies, and you will get more intuitive. And what you'll quickly find is, once you understand the statement, there's a lot here in value and analysis, but just getting that initial structure is different because your muscle memory is different, because this is not the GAAP cash flow that you've previously seen or put together. And that's where a lot of people really struggle with the statement. The purpose of the statement is different. Questions about that? All right, so let's talk about analytics. So this will be on the midterm, part B. And what I'm going to do is I'm going to give you a statement that looks like this, and then you're going to have to do some analysis and write it up as an essay question. So what I want to do is I want to talk about how do we analyze the converted statement of CFI. Right? So here's the point. The CFI statement that's been converted, and again, before I go in here, one more time, anybody have any questions about any of the categories, the numbers, the signs that are actually on the solution? The terms, what they meant, why they're where they are? All right. So, yes?
For the invested capital, do you use excluding goodwill or including goodwill?
The formal definition that the book introduces that we're using includes goodwill. Right? And again, just think about it this way. If I build a factory, I do capital expenditures, and I'm operating that factory to make products that I'm going to sell to customers. The whole operating philosophy. Somebody else builds a factory, right? I buy their factory. I then use that factory to make products to sell to customers. In a way, it's really the same thing. Just buying somebody else's factory could be A, faster, and B, it's often more expensive. So the point is, the intent is I'm buying it to operate it. Therefore, that premium I'm paying is for operating reasons, to own the factory and make more products. Therefore, goodwill is operating. Okay? Now, again, this is where people will take shortcuts in the real world, because Bloomberg, just as an example, will actually have a number in there called free cash flow. That's why, guys, for your last homework assignment, which we'll get to really more after the midterm, but for your last homework assignment, I had you create operating free cash flow, because the definition of Bloomberg's free cash flow is gross cash flow minus CapEx. So Bloomberg ignores changes in working capital, and Bloomberg ignores investments in goodwill. Okay, so that's why we created the definition that we did, because there's going to be a compare and contrast between the shortcut version and the version that we actually just put into our last homework assignment. So again, more about that after the break, but the short answer is goodwill is operating, therefore it's part of investing capital, therefore the change is going to be part of gross investment. Great question. Other questions? Yes?
Explain the sign of the change in excess.
So, let's look at 2015. 2014. So I have positive free cash flow, 559. Okay, so I generated more than I spent. So now the question is, what do I do with the cash? Well, I take some of this cash and I can see this on the balance sheet, I increase the cash on my balance sheet, which I'm calling savings. So I put money into savings. Okay? So since I took money that I made in profit, my free cash flow, and I increased the excess cash savings account, I reduced the amount of money that I have available to pay to my investors. That's why the sign is a negative. Because what it's doing is by putting in the bank, it's taking away from money that I could use to make bill payments. So that's the way the sign works. Right? The opposite would be true. I could lose money, but I have cash sitting on the bank. So what I could do is I could draw down my cash and then use that cash to pay bills, even if I don't have any profits or even if I don't have a job. Right? So that would be a positive change in the excess cash, because what it would do is it would add to the CFI that I have available to pay out. Okay? So that's the tricky one, but that's what's going on with the excess cash. Good question again. Others? All right. So back to the analytics. When we analyze this statement, and again, I'll say this, I told the previous two classes, that good financial analysis is actually storytelling. There's a lot of data here we want to put into a story to understand what's going on. And there's a lot to the story that's actually on this page. And even in the next 10 minutes, you'll be surprised at how much of the story is sitting here once we know where to look. And that's where the CFI statement can be very valuable. 4 sections. The first section is the operating section, and the key element there is called free cash flow. So every time you look at the CFI, I want you to start with the free cash flow. All right, so in 2014, it was positive 559. In 2015, it was negative 355. And what I'm telling you is start with that number, and that will immediately give you some insight to the story of what's going on with this company. So, company has 559 of free cash flow. What does that tell you? What should we immediately know when we see a positive free cash flow? In 2014, what should we immediately know? So mechanically, free cash flow is gross cash flow minus gross investment. I have a positive free cash flow. Well, one insight I should immediately have is I spent less than I made. Right? I didn't reinvest all of my profits, and I have money available to be paid out. Think about 2015. I have negative 355 of free cash flow. That means I spent more than I made. So I got to go find the difference. So here's the idea. In 2014, because I have positive free cash flow, I know when I go through the other sections of the free cash flow CFI statement that where did I spend that money? So I generated 559. Did I put it into the bank in excess cash? Did I pay it out in debt? Did I pay it out to the shareholders? What combination? So I immediately know when I go through the rest of the statement that I have money that's being distributed. So the question is, where is it being distributed? Think about 2015. I have negative free cash flow. I got to go find that money. When I go to the rest of the statement, I immediately know they spent more than they took in, which means I know they borrowed it from somewhere. So did they raid their piggy bank? Did they issue some debt? Did they issue some shares? But that's the point. By looking at the free cash flow, it already tells me what's going to happen with the rest of the statement. Because if I have free cash flow, then what's the distribution? If I have negative free cash flow, then where was the funding? So immediately I know that just by looking at the free cash flow. Here's the second thing. I added a ratio on here called the reinvestment rate. The reinvestment rate is gross investment divided by gross cash flow, right? 2014, the reinvestment rate was negative 46.7%. What does that mean, to have a negative reinvestment? What would that mean? I'm disinvesting in my business. What does that mean? I mean, you can see practically, I have 381 of gross cash flow. I disinvest, I have 559 of free cash flow. I'm not really spending anything on capital expenditures. And what I'm really doing is I have this change in negative other long-term liability. What it really meant is I didn't pay a vendor. So I generated cash because I chose not to pay a bill. And that, coupled with the fact that I didn't really spend any money to grow, allowed me to have positive free cash flow. All right, so one thing I could notice is I have enough profit to cover my reinvestment. But two, I can see that in this case I actually disinvested. How is that different in 2015? What's different about the negative 355? What do we immediately know that's different? Yeah.
Pay off some of that long-term liability.
All right. They paid off, but what else did they do dramatically different with the reinvestment rate and the other part of the gross investment? What's the biggest gross investment they made? Well, the total was 748. What's the biggest line item that led to the 748? CapEx. So they're spending 660 on CapEx. So what does that tell you about 2014 versus 2015? Why would they spend a lot on CapEx? Why would you build a lot of plants?
You're trying to grow.
Exactly. What's the growth story for 2014?
They didn't.
They're really not trying to grow at all in 2014. So this is what I mean by the story is already being put together without even talking to the company. That in 2015, I'm the analyst. I already know they're trying to grow. I can see that in the CapEx. That's why they're spending 190% of their profits and plowing it back to the business. So my questions to the management is going to be, where are your growth areas? What are you trying to grow on? Where are you spending the money? Where are you going to see the growth? 2014, you really don't look like you're trying to grow. Is that the case? And oh, by the way, who's this vendor that you didn't pay? And when's that money going to be due? So I'm just telling you very quickly, we start to see a fundamental difference between the trajectory of the 2014 company and the trajectory of the 2015 company. They're really going in completely different directions. Now, you might say, look at this data, that sounds pretty schizophrenic, right? And the point is that I literally made these numbers up just randomly, right, for purposes of the assignment. So I didn't try to put together a coherent story, and that's why 2014 and 2015 look completely different, because I just wanted to see numbers going in different directions. But the point is, that's what you would see. You would see completely different stories initially, just in the operations of where they are in 2015 and what they're trying to do. And they're trying to grow, and they're putting a lot of money into growth, more than they're making, so making a big bet on growth. So for that business, I'm going to be much more concerned about the future. Where business A, 2014, well, that year they don't really look like they're trying to grow, and it doesn't really look like they're making big investments, right? Because I don't really see any capital expenditures. So this business, it's just a different state, and I immediately see that, right? So then, as I said, I go through the next three sections. So think about 2014. I have all this free cash flow because I'm not growing and I'm just taking all my profits and not paying my bills. So I have 559. What did I do with it? Let's look at the non-operating section. What did I do with my excess cash? What's that negative 105 tell me? What does the negative 105 tell me?
That you basically just banked a lot of it. You took it out of the operating side of your business.
Absolutely. It's a great way of saying it. I banked some of the cash. Right? Then, what's the other thing that happened? Change in equity investment. That's a pretty big number. What happened there? Well, it looks like I bought a stake in another company that I don't manage. So I took the $559, I put some into the bank, and I took some $250 of the money, and I went out and I bought a piece of somebody else. After I did that, I still had $213.4 available to distribute to my debt and equity holders. Right? So where did I distribute it? What happened on the debt side? Paid a little interest, 43.4. What's that change in short-term debt of negative 160 tell me? I'm sorry? You paid off the debt?
Yeah, you actually took on more.
No, you actually took on more debt. So I actually increased my debt by 160. Look at the balance sheet. You'll see the debt balance went up. So here's a question I've asked on several midterm exams, and it surprises me how many people continue to miss the question, so I might do it again. Right? So, did this company need to borrow that debt? Yes or no, and why? In 2014. Did it need to borrow the 160? Was it necessary? Yes or no, and why? Think of that as a Part B essay question. Did this company need to borrow the debt? Key word is need. Did they need to borrow the debt? Not did they want to borrow the debt. Did they need to borrow the debt? You want to take a shot at that? Yeah.
They could have just not repurchased much stock, so they probably didn't need to per se.
Exactly. So go back a step. You're jumping to the conclusion, which is right, but go back a step. Did they need to borrow the debt? Why not?
They had plenty of money anyway.
That's the key. They had plenty of money, and define, how do you know they had plenty of money?
Just looking at the bottom section there.
Nope, top section. So by the way, this is the difference between a strategy class and this class. You can't just be directionally correct and just make up general statements. You got to be specific with the numbers that support your conclusions. That's the only way I know, and the TAs know, if you actually understand the theory. So you must include specific references to numbers in your answers. What number on the 2014 column tells you that they had enough money that they didn't need to borrow the debt? Yes?
Well, even after they paid out everything, the CFI was still 213.4.
Exactly
That's
right.
Better than 160. You would still have 53.4 left over.
But that's the point. They had 213 a CFI. They clearly didn't need to borrow the debt. They had 559 of free cash flow. They clearly didn't need to borrow the debt. Matter of fact, they put 100 into the bank. So even with all that, it's clear they really didn't need the debt. So this is what I mean by it's very clear that this company is making a discretionary debt issue. So why did they borrow the debt? What did they do with the 160 and the 213? Where did it go? Look at the equity section. What happened in the equity section? They paid some dividends, but what was the real big spending on equity?
Repurchase all
They bought back a bunch of shares. Okay? So that's the point. They borrowed money to buy back shares. This was a discretionary change in their capital structure. That's what they did with the debt. And I can clearly see that on this statement. They didn't take their CFI and just buy back the shares. They increased their debt because in addition to buying back the shares, they paid 40 plus 20 plus 25. They basically paid 85 in dividends. Okay? So they paid 85 in dividends. They paid 43 in interest. And then they still wanted to buy back a bunch of stock, more than they had in CFI, and they wanted to increase their cash balance. So I want to increase my cash balance. I want to buy back my stock, and I don't have enough money to do it. So therefore, I add some debt. Now, if the banks are willing to let me do it, that's great. But I'm just telling you, think about the story of what's happening with this company and starting to think about, is this stock buyback really as attractive as it otherwise might look? Because this isn't a sustainable stock buyback where the company's buying back stock because it has all this cash flow, it's just distributing. It's basically using the stock to kind of prop up some problems because they're not really growing and they're not making any investment in capital expenditures, and they're generating cash flow by not investing in their business, and then they're borrowing even more money to buy back the stock because they want to make their balance sheet great because it makes it look like their cash is increasing, and the real reason their cash is increasing is because they're not paying their bills and the liabilities are growing. So you start putting all that together, this doesn't sound like the rosy scenario that the company's envisioning about I have confidence in my business in the press release, therefore I'm buying back my stock. I don't see a lot of confidence in this business. I don't want to own this. There's some troubling things here. Now, let's look at 2015. They have negative free cash flow of negative 335. Part of the reason is they're making a big capital expenditure. Now, what's happening in the non-operating section in 2015? What's happening to excess cash?
They banked even more.
Exactly. Could they afford to bank even more?
Not this year.
No, because they had negative free cash flow. They put more money in the bank, which made their CFI even more negative. So how did they actually get a little less negative CFI? What did they do?
Sold off some of what they bought the year before.
Yeah, they sold off some of that, interest in other businesses, the equity investments. And oh, by the way, they chose to not pay a long-term liability that was non-operating. So that helped their CFI a little bit, but it was still negative 227. So now, what happens to the change in long-term debt? What's that negative 400 tell me? Did they issue long-term debt or did they pay off long-term debt? They issued long-term debt. But they had to because they had negative CFI because they made a big CapEx and they had negative free cash flow. Right? Completely different trajectory than the 2014. Now, they also paid some interest and they also refinanced some of the short-term debt. So they used some of the long-term debt proceeds to pay off the short-term debt. What else did they do?
They issued new stock.
They bought back, they paid out more treasury stock. So they used the debt to finance the negative CFI. How did they pay for the treasury stock again? And the dividends? They issued some preferred stock. Now the company would say, well, I issued preferred stock to fund the capital expenditures. Money's fungible. But when you start to put it together, like if they didn't pay out all the money to the common shareholders, they wouldn't really need to borrow the preferred stock to give it to the common shareholders. And they probably wouldn't have needed as much debt to fund all of that stock repurchase and dividend payment, given the negative free cash flow, given the fact that they wanted their cash balance to go up and they wanted to make a big bet on new capital expenditures. So this is what I mean by storytelling, is look how much we can get out of what's happening to a company just through the CFI statement. Right? Gives us a lot of insight as to what's going on. Right? So let's apply this process and methodology to a real world company. So I put this in lecture note 4, right, which is in the file section of Elms. Here is McDonald's. So let's look at McDonald's.